the real power of intelligence and of growing is in the intelligence of your questions, not your answers.
Hmm.
It questions are where answers can be outsourced.
Yeah.
Questions are what unlocks opportunities in real movement.
Hello and welcome to Pillars of Wealth Creation, where we talk about creating financial success with a special focus on business and real estate. I'm your host, Todd Dexheimer. Now, let's get to it. Hello and welcome back to the show. Excited to have Stephen Morel on. Stephen, how are you doing today?
I'm doing well. Thank you for having me.
Yeah, absolutely. Well, appreciate you joining us. A little bit about Stephen. He's the founder, CEO of Juris, a New Orleans-based prop tech startup that's democratizing access to tax lien investing. And so I'm excited to talk to you, Stephen, because we haven't talked about tax lien investing. We've talked about everything real estate and a ton of different business stuff over almost 900 episodes. But we got to dive into this topic. So it's a big market. And it looks like you're trying to expand all over the country. So I want to really just kind of dive into what you're doing, dive into tax liens a little bit, and tell your story here. So, Steve, give our listeners a bit more about your background, and we'll dive into what you're doing today.
Yeah, sure. It's my background. I'm born and raised in New Orleans, Louisiana, and went to LSU undergrad and law school. Go Tigers! I started out as a most attorneys do out of law school. They're just looking for a job, especially in today's market. But this is a while back, and just didn't. Never was happy with it. It was just meaningless work for other people, billing hours, going on vacation, thinking about billable hours, and it was miserable. And then Hurricane Katrina came, and I'm dating myself, but this is a big part of my story, and killed a lot of people, ruined a lot of people's lives, and destroyed my house. And I had to come back and pick up the pieces. Thankfully, I'm a veteran, and I had USAA insurance, and they were the first ones on the ground with checks in their hands and saying, "Hey, good luck." I was back in my home by Christmas, but after I finished repairing my house, I looked around and the city was still in shambles.
I'm sure. How many years did it take to? Okay, so this happened. Hurricane Katrina happened in
2005.
2005,
Yeah,
right?
right.
And it was in like what was it in August or September?
It was the end of August 29th.
August. Okay. End of August.
Yeah.
Wow. You were back in your home that quickly?
I was. And certainly didn't have it as bad as some people did. I mean, we had a two-story home, and the first floor was gutted. Second floor was eerie in the sense that it looked like nothing happened. If you'd have just stayed upstairs, you'd been like, "Oh, the hurricane missed us. Thank God." And you walk downstairs, it's like
the smell of the mold coming from the first floor.
Yes, primarily from the refrigerator that had been closed. Yes, yeah, that was a whole different thing. And that was our kitchen was on the second floor, and that was just you don't even open it, just tape it up and bring it to the street.
Yep.
But I had to get my hands dirty with real estate, and I had never just my path of my life, my childhood, and everything just never really got into. I didn't know what a caulk gun was. I didn't know what weatherproofing was. I didn't know anything, and I just had to learn. And I mean, this was not a typical market post Katrina. Everybody was just fending for themselves, and so I met all kinds of industry professionals, mortgage brokers and realtors and contractors and lenders and everything. And I'm an attorney, and I hate what I'm doing. And I'm like, hey, you know what? I could do something here. I'm back in my home, and the rest of the city is still up for all intents and purposes, completely shuttered.
Yeah.
And I'm like, what I keep hearing is that you can't find anybody. Nobody knows where anybody is. It happened so fast that everybody evacuated, and nobody left hey, here's where I'm evacuating to card with the assessor as they drove out of town. It was just get out,
Yeah, in 2005 wasn't really like social media days too much either. It's not like everybody was on Facebook and Instagram and so on.
In fact, it was Katrina that spawned texting. Text messages became a thing because you could not get through on a phone, and nobody knew what text messages were until you started having to use it. And people were like, Oh, I get it. That makes a lot of sense. That's the first time people used text messages.
Oh
Was after
man,
post
isn't
Katrina.
that something?
And now you're like, I can't live without it, you know?
Yeah,
And
I still remember the first time I started using text messages. So it was one of my contractors. He's like, "You got to start texting," and this is probably like
right.
2009,
And you
maybe
probably said something like,
2010.
just leave a voicemail. I don't understand.
Yeah, like, just call me. How long did it take for the city to rebuild, like for things to feel maybe not 100% even back to normal, for things to start to feel more normal?
I'll tell you exactly what it was. And I was very fortunate to actually be there. The season opener for the New Orleans Saints in 2006, they hosted the Atlanta Falcons on Monday Night Football. And it was the reopening of the Superdome. And as you remember, all those iconic pictures of the Superdome being in shambles, and all the water coming through, and all the people who were trapped there thinking
Yeah,
it was a place of refuge.
yeah,
And there were people that were calling for the city just not to be rebuilt, for the Saints to move away,
yeah.
and this is a city that does not have any other sports teams. This is the heart of the city. This is the passion of the city, and it meant so much. They had, this amazing recruiting class, like, but they brought in Sean Payton and Drew Brees and Reggie
Yeah,
Bush and all these people,
yeah,
and they were like, oh my God, like well, this was the grand reopening. U2 was there. Green Day was there. I mean, this was a major buildup. And the opening drive of the game, Steve Gleason, who's iconic now in his own right because he's battling ALS, but he blocks the punt of the Falcons and they pick it up and run it in for a touchdown on the opening drive of the game. You can't write a story. No one would believe you if you told a story like that. And the entire city is just like, oh my God, this is why we came back. This is that feeling that you had, like this is our team and this is where we belong. It was amazing. And I mean, I was in the stadium when that happened.
yeah.
And it was just a surreal experience. And that was the first time it felt like, okay, now I remember why we all, painstakingly came back and trudged through what to get here, and why we're here today.
Yeah, and literally drudged through it. So,
Yeah.
is that the year they won, or that the season they won the Super Bowl?
No, that was a few years later than '09, but they
Okay.
they made it to the NFC Championship game and lost to the Bears.
Okay.
I'm pretty sure that was or the divisional playoff game, but they made it the playoffs, which was for the Saints in their history was a remarkable
Yeah.
accomplishment in of itself. But no, it was the 2009 season they won the Super Bowl.
Well, they beat the Minnesota Vikings to get there. Yeah.
They
So,
did. They did with Brett Favre.
with Brett.
Yeah, that's right. Yeah.
Yeah. So, I'm from Minnesota. We love our teams that
Sure. Yeah.
consistently lose.
Of course.
Okay, well, good stuff, man. That's a wild story. So you got into real estate. You decided you liked something about real estate.
Yeah.
What got you into then tax liens?
Man, that was totally unplanned. Well, I had a law license. I had needed to do something with my career, and I again, with coming back to the point I was making earlier about trying to find people. It was such a huge part of, and not necessarily all about for legal reasons, but it was just, if people weren't coming back and their house is sitting there, it's not being fixed up. What happened to a lot of them is they weren't paying taxes on them either. And it's the number one source of revenue for local communities, counties and cities is real estate tax.
Real estate taxes. Yeah.
And if in the time of the city's existence where they needed revenue the most was right then, and they were hurting because they didn't have people to be paying into the system. And you couldn't move the property because you didn't have all the owners. So you can't just take it. You have to actually have a legal process. And so it was just almost like a stalemate. It was just, between how do we recover and everything. So I had people start coming in the door. And when I say the door, I started a title company. That was how I thought, okay, I'm real estate law, don't want to bill hours and practice for other people. I'm like, there you go. There's a title company. And so I started doing that. And what happened was I started getting investors coming in the door who had portfolios of tax liens and tax deeds in Louisiana. I knew nothing about it, but somebody walked in with a realtor who worked for a big institutional investor out of state who had, hundreds of these things in Louisiana, and they couldn't move them. They were the ones that they had to foreclose on. They couldn't move them. They said, "Hey, we can't get title insurance on these things. The courts keep striking them down. I can't get anyone to approve title insurance. Can you help? I don't know what you can do, but can you help me? I got to move these properties." And I was like, "Oh yeah, sure, I can do that." I had no idea what a tax sale was, so I'm like, let me go read the book, and it was just sort of an opportunity that fell into my lap, but it made a lot of sense with where I was in my life, and I would run my own company. I had an opportunity to help the city because the tax revenue helps. Moving the properties back into commerce helps. It just made a lot of sense. So I made it started going down that path, and I never turned back. And it became something of a passion of mine. I helped rewrite the laws in Louisiana twice. The first time I was sort of just kind of hanging around in the back, learning from other people. And the more recent time was just this year, 2026. It took effect. But it was the byproduct of like 5 or 6 years of a study group they call the Law Institute that advises the legislature on constitutional changes. We rewrote the whole system, and it's now being looked at as like a model legal system for tax sales across the country, particularly because of a couple big Supreme Court cases, one of which came out of your home state of Minnesota from a few years ago, the Tyler v. Hennepin case. That was anyway, but the point is that like that really pushed me down that path of, hey, this is working and there's a lot of need here, and it was an uphill battle, but I eventually got a title insurance product into production with a national underwriter. Got it through the State Department of Insurance. I had no experience or blueprint for any of this stuff, by the way. It was just a got to go get it. Got to go get this. This is an opportunity. It's a niche. No one else is doing it.
Got to figure this out.
And as I finally got a program together, had some buddies of mine were working with a software company that was local in New Orleans that worked for the tax collectors, the local tax collectors. And every year, of course, there's delinquent tax. They have to go through a set of legal requirements to sell delinquent tax liens, which is basically the tax debt that somebody owes that they haven't paid yet, and it's now delinquent, just like if you fell behind on your mortgage. But because the money that they're trying to collect is so vital to that year's budget, and this is not a Louisiana thing, this is across the country, they have to make tax collections of like top level importance. And if you don't pay, they make it really attractive for investors to come in and pay for the delinquent homeowner who hasn't paid yet, with conditions, of course, and with protections. So you can't just go take their home on day one. There's usually a waiting period and all this stuff. Yeah. But anyway, there's an annual cycle that they go through, the tax collectors, every year. And so this software company was helping government to do all of that work and then to actually hold an auction. And they were the first ones to have an online auction for tax liens. Now almost everybody does it. And they were always interested in these properties, these tax liens that went up into auction, but nobody bid on them. And so it became uncollected debt. Like the county tried to collect it, but nobody bid on it. So the investors didn't pay it. The homeowners hadn't paid it. Nobody's paid it. So the laws allowed the government, the local government, to eventually, after some kind of mandatory waiting period, to put the actual real estate up for auction. But it was, you can imagine that like the title companies were like, yeah, right, I'm not touching that. That's a landmine. And those are the properties that we were given to apply the new title insurance product to. And we got it done. And that program still exists today. Over, I think 12,000 properties have now gotten reinsured in that program. They're now back in productive use and back into commerce, producing tax revenue that would have been abandoned, blighted properties by now for sure. So that worked. But I wasn't an owner of that company, and the system was working. So in 2020, I left and started my company today, which is Juris, and that is more investor facing than government facing. But it's systematizing the entire life cycle of investing in tax liens, but not just in Louisiana, nationwide.
Yeah. So I want to talk about the tax liens, because this is it's a confused to me at least. It's a bit confusing. I
Yeah.
actually, it's funny. I think it was yesterday. I got this letter in the mail,
Mm.
and it's a notice of sale by auction for a tax forfeited property. This is in the Twin Cities. And they sent me this and they sent me the map, and it's right next to a property I actually own.
Okay.
Um, so that's a tax forfeited property.
Hmm.
And I kind of did some digging, and it's going to go on to auction, and they've valued it. And they said you can't sell for underneath their value, which their value to me is stupidly high.
Right.
So I'm not going to pay it.
Usually it's
So it's just not going to sell. I'm assuming nobody's going to buy it. But anyways, beside the point, I want to know about tax liens, tax deeds, tax forfeitures. Like,
mhm.
sort these out for me.
A lot of them are the same thing. The
Okay.
two big categories are liens and deeds.
Yep.
Those are the really, if you just kind of simplify things, just think about two buckets. And the lien is effectively the debt, the tax debt that's owed. It's the monetary amount. A tax lien is very similar or analogous to a mortgage.
Okay.
It's secured by the real estate. It's debt that the owner owes and is now delinquent on and hasn't paid. So think of it not just a mortgage, but a mortgage that is in delinquent status.
So they
That
owe $20,000 in back taxes.
right.
This thing goes to auction. Do you have to pay the $20,000, or is it highest bidder? How's that?
So the mechanism of the auction and how they sort out competing bidders to see who wins the right to buy this tax lien. So let's roll it back a half step.
Yeah.
So as I mentioned before, the local government has to collect this. It's paramount to meet budget and to avoid cutting budget and whatever. And this is basic public services, right? Police and fire and
Yeah.
roads and
Schools. Yeah.
right, exactly. So a certain amount of homeowners don't pay after a certain amount of time. And now, because of the importance of collecting, the local government that the money is owed to holds an auction and says, hey, who out there wants to pay this debt on behalf of the other person? Now, normally you'd say, that's crazy.
Yeah.
But what if I told you that I was going to give you X amount of interest on it? You can step into the shoes as if you were the government. You hold all the rights to foreclose, like you're stepping into the shoes of of the creditor, right?
Okay.
But you didn't sign a contract of giving this mortgage out. You're just they're awarding it to you, right? And it's gonna pay interest. It's gonna pay. You could have rights to foreclose if they don't pay you back within a certain amount of time. And so it's you start looking at it like that. And it's like that's a pretty good deal. It's granted super priority status, so you literally leap over mortgages that are already in existence. So if you have to foreclose, the first dollars out of that foreclosure come to you, not them. It's a pretty sweet deal, and the institutions that have been investing in this space for the past century have been pretty consistently making between 15 and 18% year over year, and nobody else is really touching that. And it's not because of laws that say you can't do it. It's because it's super complex and difficult, and
Yeah.
it's like, how do I even compete with them? How do I get involved? I don't understand. Like your question's perfectly normal. The heck is a tax lien indeed? They all sound the same. It's too confusing. Whatever. And that complexity is the institutional investor's best friend because it keeps everyone else out and no one else can touch it. But that's exactly what Robinhood did for stocks and crypto, et cetera. It's like, it's too unapproachable. It's too untouchable to the average Joe, right? And then they come along and say, hey, just press this button and you're in. And that's what we're doing with tax liens. So so the tax lien itself is the debt. You are taking over as the creditor, as if you were the government. Right now, they're out. They've been paid because the investor paid the cash. So now the government's good. They have their money. Now you hold the paper.
Yep.
And every state has different laws about this. Some make you wait 1 year. Some have a waiting period of 2 years before. What is this waiting period? It's the period interest is accruing. The homeowner or the tax debtor has the absolute right to pay it off without getting into foreclosure and recover, and the lien goes away and everything if they pay it off, but they got to pay it with interest and probably some costs, et cetera.
Are they still paying? Let's say if they pay it off, do they still have to pay you annually?
No, it's a one-time thing. So it goes.
One-time thing.
Yeah. The collector the tax collector of the county or the city, it doesn't lose its positioning as the tax collector. It's just that one year's tax is paid by an investor. So every year, like it's like a new mortgage gets issued on the property every year, right? Every year, a new mortgage gets issued.
That makes sense. So they're still, the cities or county is still assessing the property. It's
Oh
not
yeah,
like that went
absolutely.
away.
Well, think about it. Every year they need a new round of money to fund the county, right?
Yep.
Every year is a new round of expenses to pay for. So that's why you get a new tax bill every year. So the same problem can resurface every single year if it's not paid. And sometimes people, it's a low interest loan. I mean, it's not the worst thing that you could do. It's better than losing your house. Some people just look at it as like, hey, I can't pay my tax bill right now. Someone else goes and pays it, but the law allows you to pay it back within, let's say, 18 months, 2 years, or whatever, with interest. Yeah. That interest is undoubtedly a lot lower than some of the loan rates you get online right now. Right. So they're like, hey, all right, I'll just set a deadline to pay back by a certain date, and you're immediately approved for your loan, because you own the house. So yep. It's just the way it goes. But what happens if that debt does not get paid back within the required time period that they offer to the homeowners without consequences? That's when it gets into similar to like a mortgage foreclosure positioning. The creditor, who's now the private investor who holds the paper, that one tax lien on that one property for that 1 year, can now initiate a foreclosure to put the house. It's like a lawsuit. This is not the exact same in every state. So I'm just kind of giving you the most typical, the average. Most states have some kind of system, and more states are moving towards the system I'm describing right now. Like what Louisiana did, which is the lien happens, there's a period to pay it back. If it doesn't, then you go foreclose like a mortgage. Yep. That doesn't give you the right to go walk into the house, right? Like again, just if you keep analogizing to a mortgage foreclosure, it's exactly the same. I mean, almost identical. You file a lawsuit, they go, the sheriff or constable goes and seizes the house. There's legal notice, there's service, and all this kind of stuff, and then there's an auction, and then highest bidder wins, and then out of the liquidation of that property sale, the creditor gets paid back whatever they're owed, and then the new owner owns the house, the homeowner is out. Now, interestingly enough, right there, that's where the Minnesota case came in. So the Tyler v. Hennepin case, this is about 3 years ago, U.S. Supreme Court, totally apolitical. This was 9-0 decision. It was the perfect fact scenario. Little old lady in the house. And it was Hennepin County, and Hennepin County decided that they did the whole thing. They put the house up for auction, and the house sold for way over what the tax debt was that created the foreclosure in the first place. So there's surplus, and that's the buzzword, is the surplus. And in Minnesota, in Hennepin County, they just decided to keep it.
Hennepin
Why not?
County wanted to keep the surplus.
Yeah, why not? They just kept it. So there was, all kind of public action groups and whatever, and they jumped on it and brought it all the way up and said, yeah, you can't do that. That's like, punishment doesn't fit the crime. Like it's the whole thing where, the unfair taking or due process clause is kicking in here. Several other constitutional provisions where, what they took from the homeowner was way more than what the consequence was, what the penalty was in the first place, like paying the tax off, right? Mm-hmm. So they had to create a system of putting that surplus back into either the registry of the court, like lost funds, or at least making an effort to try to notify them, saying you have surplus money here that belongs to you. So, and that's how that happened. But what that does is it's interesting because it came out of Minnesota, but the high level picture there is investing in tax liens was way more confusing before that case than afterwards. And I'll tell you why. Your question was one of the most common questions for people who are not into tax liens. So it's just, what is a lien? What is a deed? What is this, forfeiture and all this kind of different stuff. You really did see a lot of variance in the state laws across the different 50 states. Yeah. Some weren't selling a lien. They were just collecting in-house on the delinquent tax bill for a number of years, and eventually just go right to putting the property up for auction and never actually sold a lien. They just kept the delinquency longer. And some would just sell a lien and not do a deed. And so it was like, wait a minute. What we're trying to do here is collect tax. That's it, right? And we have to have consequences to enforce that, to have some teeth behind this, right? But what Tyler Hennepin case really did was pushed it into a kind of a more of a homogenous asset class. It said, this is really just an interest play here. This is just a lien. You're not going to be entitled to go grab the property. You can't go get the surplus. None of that. That's things that would be, similar to if there was a deed type of investment. If you really was a property grab or like an auction play, yeah, that's the deed, right? But on the lien side, it's an interest rate, and with some penalties and attorney's fees and that kind of stuff. But you're playing to get a return on your investment, which is what most like mortgage-backed securities, people who invest in real estate securities and pools of mortgage-backed securities, that you're going for interest. You're not going to try to get the property, And so tax liens really is becoming more and more like that, and that's why the opportunity is great right now for a system like what we're creating, a Juris deed, to make it into this homogenous asset class that is no different than anything else. That, hey, you can just put money into the market, it's returning X amount of percent per year, and it's not that complicated because we've decomplicated it behind the scenes, and you don't have to worry about that.
So you're really just trying to hold a piece of paper.
Yeah.
Yeah.
You want to be paid back.
And you want to be paid back. Are you getting at, let's say that person owes, 10 grand in taxes. Are you trying to get that tax lien at a discount? Is that something that's pretty common, or are you paying for the whole thing?
So this again speaks to the differences in different state laws and how they auction off the debt. But that you're not going to see anything where you're bidding the tax amount down, because that's the whole reason why they're having the auction in the first place, is to collect that amount. Now, what they do have is competitive options that you see from one state to another. Some states will do where the interest rate that applies to the debt, you can bid that down. So it might start at 12%, and then competitive bidding says, I'll take it at 11%, or I'll take it at 10%. So you're working down your ROI to say who can win this lien, and how do I fairly allow competitive bidding to take place for this one thing that I have to offer to the public, right? Yeah. Now, some other states they do what's called a bid up premium, so you could actually pay more than what the tax is worth with interest being constant, and saying I'll pay $11,000 for that $10,000 tax bill.
Why would you do that? How do you make money on something like that?
Well, it's the same. You run it into your ROI calculator, right? It's like you're going to get X amount of interest rate. Let's say, for example, in Louisiana, it's a 12% simple interest rate. So 1% per month, and it's on a monthly cycle. So, you pay it next month, it's 1% more than it was last month. No compounding, just simple interest. And so 12% per annum, right? And let's say that you paid $1,000 for this tax bill, and it's accruing, at 1% per month. But let's say you go back and keep that interest rate at 12%, but you paid $1,500 for that $1,000 tax bill. Now, if you get redeemed, which means the taxpayer paid it off in the allowed time period, they're not paying you the surplus back. They're just paying what they owe, right? You can't increase the debt. Yeah. Which means that's eating. You're not going to get that money back, which is that's eating into your return. Well, to what extent? I mean, I'm not a walking calculator here, but what is the $1,500 after 1 year at 1% per month? I'm sure half of your listeners are probably like shouting out the answer right now, but that's why I went to law school, so I wouldn't have to do math, and here I am trying to do math online. But my point is that is still probably an attractive return, so you just have to, but you can overbid for sure and be eating into that too much. It's just a matter of like, if you have $1,000 that you want to deploy into this space, you've dedicated that, you've allocated it, you've said, I need to go put this in tax liens, but you lose the auction, you're not making anything, right? Because you haven't deployed it. Right. And so you have to try to figure out what, you have to put it to use, but you also figure out what your floor is. And it's a whole bidding strategy that is state law specific. And those nuances from state to state, both the interest play, the redemption period, the legal compliance, you have all kinds of things you gotta satisfy while you're holding that paper. You gotta send legal notices and do research. And then you have rights of foreclosure, and those are different things. All of those state by state complexities, that's what we're normalizing at Juris Deed. Like you can just invest the dollars. Now you can know what the different returns are from state to state, but you don't have to figure it out. We have that figured out for you. So it becomes more homogenous and it becomes more of like, this is the vehicle where I feel safe putting this amount of money in and I can make X amount of dollars. It doesn't matter if Minnesota's laws are different than Louisiana's.
Does every state do the tax lien sale?
No,
No.
no. As I mentioned, more and more are starting to gravitate towards having that system that I was describing for Louisiana, which is tax lien, waiting period, foreclosure period, right? That's sort of that kind of three-part system. There are many that still hold that just sell tax deeds, so they don't sell a lien at all. They just the delinquency is older, and then they just sell the property to satisfy the delinquency. And then some don't just. I think there's a handful that don't even sell them at all. They just do it. It's in-house collections, and they just that's just what they want to do. I think a couple of places actually have a securitization where they or a syndication, excuse me, where they'll sell it all to like the whole tax roll to a big bidder, like Goldman Sachs or something like that. It'll sell by all of the whole tax roll at one time, but handful. And for the most part, though, I think it's like 35 states now do tax liens. This kind of three-part system I was talking about.
What is the tax forfeiture then? Tax forfeited property.
Well, that's going to be a Minnesota specific word. Not that I've never heard it before, but it I believe what that's trying to say is that it's going to its final stages of collections, and then you're offering up the right to then foreclose on the property. So that's kind of what you're getting at is, or like the letter that you have is probably indicating that it's gone through that delinquency collection period, and now it's time to
the property. It sounds
to buy the property to satisfy the debt, and that would be the most common use of that term in this context.
Got it. Yeah, I was on the website the auction website, and there was like a sliver of a property for sale.
Yeah.
And I'm going, who would want to buy that thing? It was like a tiny little sliver, and it was totally landlocked.
That happens a lot.
I don't want to own that thing. It's like put a flag up next to the neighbor, which is probably used to be theirs. They're just probably like, we're not paying taxes on this thing. Nobody's going to take it.
And that underscores one of the most important parts of being successful in tax lien investing is due diligence. And I'm not talking about legal due diligence. I'm talking about like if you can't drive and find the property, you probably shouldn't bid on it. Just don't be. Make sure you're okay with one day owning that thing or needing to have to liquidate it to get your investment back. And if you don't feel comfortable with that, then you probably shouldn't even bid on it because, even though most tax liens redeem, the national rate is somewhere between 85 and 90% of all tax liens. It doesn't matter what the redemption period is. People figure out how much time they have to pay, right? If it's 1 year, 2 years, 3 years, they're going to some people are going to take the most time that they have, whatever that is. But yeah, between 85 and 90 will redeem. So you're talking about a very small percentage that are even going to ever be subject to foreclosure. And then a lot of investors, what they do is because foreclosure involves lawyers and court times and long waits and lots of risks and all this kind of stuff, is they'll do post-redemptive period loss mitigation efforts. So they will attempt to find someone else who can pay, go shake the trees and search, to skip trace and search for, heirs and relatives and saying, hey, you're going to lose grandma's home unless you pay this, and try to get someone to just pay it. Right. And then it's a really small amount that actually goes to foreclosure and actually completes the process of foreclosure.
Yeah. Yeah, it makes sense to do a lot of research on what you're trying to buy. One of my earlier houses that we owned, we actually had, and we figured this out, like, I think it was right before we closed on it.
Mm-hmm.
There was like a sliver of the property. I think it was 3 feet by the width of the property, about 40 feet. That was totally separate. It was a
Hmm.
separate piece of property. It was taxed separately, everything. Um, and it's like, if you're going to buy that property on a tax lien, it's that's a that's a property you just don't like. Why would you want to own that? It's really not worth anything. And there was
No,
nothing on it, right? It was a
right.
three. We wouldn't have cared if we lost that property. If we decided not to pay our taxes,
Yeah.
like we wouldn't
Yeah.
have cared.
Right. No, a
So
lot of people say that too. It's like, well, just stop paying it. It's not because you can't afford it. It's because like I don't want it. And it's actually like this is a good way to offload it to the government.
yeah,
So
who cares
you
about
take
that
care of
little
it.
sliver? There's nothing on it.
Right.
Let the government take it because it's literally like in the back alley.
Yeah.
So it's like, well, let the government have this thing. I don't care. We don't want it. Go, you take it.
Well, and take that example and plug it back into what I'm hammering on right now, which is like what is this investment? And what is it now? And it's an interest play, right? And that's what it's becoming more and more of across the country. And if you think about the from a due diligence perspective, you're no longer thinking about is this a property that I would be okay with owning? You're thinking about is this property going to redeem? Am I going to
Mm-hmm.
get paid back?
Mm-hmm.
That's the research.
Yeah.
That's the intelligence. And it's like I just want to make sure that this is a property that somebody is out there that is willing and desiring to pay the debt off.
Yeah. Would somebody care about this piece of property? If
Enough,
it's if
right?
it's like, well, nobody would who would care about this little
Correct.
weird chunk of property? That's probably something
And
not to bid on, I would guess,
and
right?
typically the investors who understand that game the to get the and remember if you don't win the auction you're making 0% interest, right?
Yep.
Maybe even negative if you borrowed the money to go pay at the auction. So you know the ones who understand that game they're looking for the properties that are most desirable,
Mm-hmm.
and not because they think they're going to get it, but because it's the highest chance of being paid back.
Yeah. Yeah. So you mentioned earlier, I thought you said like 16 to 18, or maybe it was 18 to 20% interest. What type of returns can people expect? Obviously zero to whatever, but
Right.
what are the typical or returns that you would want to be going after if you're going to be investing this way?
Well, I'll answer the first question first, and the second part of that is what is this way? Because it is that's the blueprint for how to get there. And but what's possible from years and years and years of experience by the institutional investors is the between 13 and 18% per year. I usually just go with 15 because it's kind of somewhere in the middle of that, and it's just a
Yeah.
little bit shorter than 13 to 18. But let's say 15%. That's pretty darn good. I mean, and
Right.
the risk level is really super low. You have something that's secured by the real estate. You have something that's given super priority status. It's backed by federal and state laws. It's not very volatile. It is a high 90% chance of being paid back. It's you tell me what else is out there like that,
Yeah.
and I'm interested. So, that's the target. Now, how do they get that is complicated, and takes a lot of learning and experience and a lot and frankly a lot of resources too. This isn't for everybody. Um, there's economies of scale, right? You go out and buy 5 tax liens and expect to get 15%, you might get zero. You also might get 20. But the likelihood is that you're not going to reach those targets because those targets are averages weighted over thousands and thousands and thousands of tax liens across multiple different legal systems and states and everything. And so it's absolutely doable. But you just got to understand like what is it going to take for me to have a high likelihood of achieving that number? Not by accident, right? By intention. And so or by design. So it's really a matter of the volume and then the intelligence behind, okay, we're going to buy that, but not this. We're going to buy there and not here, right?
Yeah.
We're going to buy today and not tomorrow. There's another big one. You pay, remember we talked about how there's a new tax bill every year. So you buy, let's say, in 2026, you go to the tax lien auction, you win. You got a tax bill. It's probably the 2025 tax bill.
Yep.
Um, well, guess what's coming out in December?
Yep.
The 2026 tax bill, right? It's not yet delinquent. It's current. and then in January it falls delinquent, and let's just say no one pays that either. Well, are you going to go pay that, or the 2026 tax sale holder? Are you going to go pay the 2026 taxes in next January and 27, or are you going to let that go to its own tax sale the following year for anyone else to bid on it and repeat the cycle where now you're kind of looking over your shoulder to see if there's some other investor who might be coming in to foreclose on your tax lien and this whole competitive thing, or do you go pay it and add to the principal that is accumulating interest, because you can do that. That's where most states are. They want the tax paid again. And so if the homeowner is not paying it, or the next year, they would rather the investor who's already invested in this property a little bit to go pay it again, right? And if you do, they're going to reward you with giving you the same interest rate that you got, or something comparable on what they call the sub taxes, the subsequent year taxes, meaning subsequent to when you first bought a tax lien. Yeah. And that is a big way that most of the institutional investors make a lot of their money, especially because in the jurisdictions where to win the auction you have to bid down the interest rate, like Florida is a great example of that. And other states do it too, where you and I are competing, and I take the least amount, right? In Florida, you go down to a quarter of 1 point. A quarter point. So we're like, why in the world would I do that? Well, you're also going to get a flat like 5% penalty right off the top. So there's like, you win the auction at this low interest rate, but you get the penalty, and then you get to pay the next year's tax and add that at the standard interest rate. Yeah. So you see how it can kind of snowball. Yep. But you got to know those tricks of the trade, and if you don't, you just go run it. Even if you pulled together a bunch of money and you're going to go buy 1,000 liens, but you don't really know that game, you're not going to get the results that we're talking about. So it's information, it's education, it's intelligence, and it's also capital, having enough to put together to reach those economies of scale.
It's really interesting. It sounds a bit complicated, but I know you've got a ton of information for people.
Yeah,
so I'll ask that in just a little bit. I want to shift gears here. So yep. What's a mistake that you've made, and how have you learned from it?
I made a big mistake when I switched careers from being a lawyer, even title company lawyer. I'm not talking about early in my career. I'm talking about when I created Juris Deed. What I didn't realize is I was creating a tech startup company. Yeah. And I didn't even know what that was. And I heard about the .com boom. I heard about some people making billions of dollars, and I heard about Twitter and all this. I was like, is that what I'm doing? I was like, and someone's like, that's what you're doing. And like, well, so what do I do is I lean on what I already know, right? Because that's what got me here. And I know there's a famous book about what gets you here won't get you there, right? And there's never been a truer way to manifest that saying than what I went through by wasting a lot of time and money on building something that I knew how to do and thought was great because I was good at it. And I understood I was an expert in my field by that point. I was, 50,000, 100,000 hours, not 10,000. And it didn't matter if nobody wants to pay you for it.
Yeah. Right.
And so a big lesson was, okay, check your ego at the door, admit that you know nothing, and go learn and open your ears and stop and shut your mouth and go talk and go listen to customers, go listen to potential customers and listen to their pains, listen to what keeps them up at night, listen to what they wish they had, but they don't, and build that.
I love that. Open your ears and shut your mouth. And so many of us, including myself, could use that advice so much more. My wife is going to listen to this and people are like, yeah, I've been telling you that for a long time.
Yeah. And look at the guy who's telling you that. He's been talking your ear off like for the past 50 minutes. Like, yeah.
That's good though. Oh man. Open your ears, shut your mouth. We always open our mouth, and so many of us just close off our ears, or we're just focused on what we have to say,
what you want to say next. Even it perpetuates, right? Even when you're not talking, you're not even listening.
Yeah, because you're thinking about how you're going to respond to the next thing, and you're already thinking about your response before you even listened to that person.
Yeah, and as a corollary to that, Todd, I've learned the real power in of intelligence and of growing is in the intelligence of your questions, not your answers.
Hmm.
It questions are where answers can be outsourced.
Yeah.
Questions are what unlocks opportunities in real movement. And so it's I'm trying to teach my kids that, is because it's like, well, if everything's handed to you now, everything's given to you, you can shout at your voice activated, Google device and have
Yeah.
the answer in a split second. It's like it really is diminishing the importance of asking good questions because you just say, "Hey, tell me this," right? And you get told it. You get told what the answer is. And if there's one thing we can hold on to with humanity, sorry to get real deep on you here, but is in the wave of AI and where this is headed is retain the ability to artfully ask good questions and to open the conversation to the information that can flow from that, rather than just delegating question asking and focusing on the answers.
Yeah. Yeah. It's a good point. I mean, one of the things that drives me crazy right now. I feel like with social media, I get this newsletter every day, and I just noticed like everything is so AI driven. This
Hmm.
newsletter used to be so good, and now I look at it and I get it, and I can just tell most of it's AI written,
Yeah.
generated. Nobody put any thought into it. It's just a computer. It feels so generic, and
Hmm.
the same thing with all these like LinkedIn posts. Like everybody's an expert today, and they're
Yeah.
just spouting off answers, but nobody's really putting the thought into it and thought into their questions either. Like, so yeah,
Yeah, it's and now you're kind of getting apathetic, right? Because you don't really respect it anymore. You see it, it's like, oh wow, John has a really beautiful carousel post on LinkedIn. It's gorgeous. How did he do that? Like, it's like everybody does, And it's like, and then there's how in the world does he answer all of these comments so fast and so like, oh, thank you, John. Great question. Great. Like, it's it's disingenuous, and the human side of us, we feel that, and there's a frustration with it. There's an exhaustion with it. There's an apathy with it, and it's just yeah. And I don't know what the answer is, but I think we're still searching for it. I think we're still searching where is our place in all this, and I'm talking about us, meaning humans,
yeah,
because we're settling into a new era where you don't have to nearly do not nearly as much as you used to have to do to interact with other humans. It's computer generated. The
yeah,
the interaction, the connection, which is the most important part of humans, is to connect. Right?
yeah,
Is the interaction is now being outsourced to AI, and it's losing its meaning.
yeah. It's getting deep, but I think like for me, I think that's where it becomes even more important to really listen, to really communicate well,
Yeah.
and to be genuine about it, because that to me, that's who's going to stand out. It's not who's best at AI, it's who's best at real life and
Right.
actually being a genuine real person and truly connecting on a granular level with people, not just an AI robot level.
Yeah, I agree with you, and I keep thinking about what's going to always remain unique to humans, like where you can't replicate it, right? Where it's not, and that's showing up in person,
Yeah.
shaking hands.
Yeah. Right.
Can't AI can't do that
Yeah. I
ever.
can't do that. Yeah. Man, Steven, I got two last questions. Favorite book you can recommend to our listeners?
I'm going to give the same answer I usually give because it really is my favorite book. The One Thing by Gary Keller.
I do like that book. That's a great book. Last question then. What are your three pillars of wealth creation?
Family, time on Earth,
Mm,
and more recently, what it means to be human.
mm,
Our uniqueness, our humanity. I think in the age of AI is become something we cannot take for granted.
Yeah. Yeah. Love it. All right. I lied to you. One more question.
Okay,
How can
no
our
problem.
listeners get in touch with you, learn more about you, what you got going on, learn about Juris Deed, and get some education on this stuff?
Yeah, looks, and I made it sound complicated because it really is. But that's exactly what we're breaking down the barriers of, is that complexity, so that
Yeah.
you don't have to feel that complexity anymore. You can just enjoy the being an investor and making the returns that you're seeking from this vehicle. So jurisdeed.com is our website. We have a growing wait list right now for early access to our beta product, which has been in closed beta with a handful of power users for the past 6 months. And we are targeting a July 1 open beta launch. So where it would still be in beta, but it would be open to the public. So it's a platform subscription with that helps you manage your assets in tax liens across the states nationwide. Satisfies legal compliance, helps you achieve those returns for you with automation, and with built-in access to actual humans for helping guide you through. So
Cool.
jurisd.com. We have our own podcast called the Innovative Investor Podcast. So we have usually 2 to 3 new episodes a month, and we're interviewing people who are bringing innovation to their space in real estate every single time. It's really, really awesome. It's been a lot of fun doing that, as well as being a guest on shows like yours. And so check us out on YouTube, Innovative Investor Podcast, also Spotify, Apple, wherever you get your podcasts.
Love it. Stephen, man, really appreciate it. Appreciate the time. Listeners, check out jurisdeed.com. Check out the podcast. This has been great. Appreciate your time, and you have a fantastic rest of the day.
I enjoyed it. Thanks for having me on. Appreciate it.
Hey, thanks so much for listening. I appreciate you being a loyal listener. I would love to have you go on to our Facebook page and subscribe. Give us a thumbs up. Go on to iTunes or wherever you listen and give us a rating and review. Don't forget to subscribe. But your rating and review just helps us push this out to more and more people and continue to grow our audience and hopefully positively affect a ton of people out there that really need this and want this. So the other thing I've got for you is a free ebook on my website. So go on to venturedproperties.com, and download our free ebook on real estate and on syndication. And I've got some data points in there, some really good stuff for you. So I'd love to have you take a look at that. It's free. I'm not expecting anything from it. And also, look, if you want some help in multifamily, want some help learning, growing, getting your business off the ground, I would love to talk to you about what it would look like to work with me potentially and see if that's a good fit. So you can go to coachwithdex.com and check that out, and we can definitely have a call. Thanks a lot for listening. You make it a fantastic rest of the day. I'll catch you on the next episode.